There we go. Let's see here. And there we go. All right, cool. All right. So welcome once again to the Advisor Growth Podcast. I'm your host, Angel Perez. I'm with me today. We have Zachary Dennis. He is a specializes in actuaries, or as an actuary, I should say. This is a really niche portion of the finance world. And I think it's also one of the most underrated. So we're really lucky to have him today because people like him tend to be kind of rare. So, Zach, for the people who don't know what an actuary actually does, how would you explain it to someone, say, a barbecue or something? What does an
Yeah.
actuary do?
Yeah, actuaries, they work in finance, they're mathematicians, and they are involved in the valuation of any financial product where the payout of money is dependent upon a unforeseen event. So insurance is the most common situation. So life insurance, you pay premiums and then the payout happens if you die within the term of the life insurance. Car insurance, the payout happens if a car wreck happens, those kinds of things. So actuaries are dealing with the probability of certain risks happening and the value of those payouts and calculating insurance premiums a lot of times. I'm a pension actuary. So we do present value calculations of the annuity benefits that a participant in a pension plan would get, valuing present value of those benefits and liabilities in the pension plans today, and helping businesses fund the pension plans and keep them well funded. Um, but I do something a little bit more unique than just your traditional pension actuary. I work on cash balance plans in the small plan space, and these are they're retirement plans that allow for really large contributions for the business owner. Um, we see business owners getting 100 to 300 grand a year in contributions on their behalf, and all that is tax deferred to the business. So what we're really designing is a tax strategy for highly profitable small businesses using a retirement plan. But the whole goal is not retirement planning so much as it is providing this tax strategy for small businesses.
So that's great.
Yeah,
That's really impressive.
yeah,
So I got to ask, what made you choose actuarial science in the first place?
yeah. I was really good at math, and the high school like math team coach approached like a few of us who had like good math grades in ninth grade and asked if I wanted to be on the math team. I decided to give it a try. I enjoyed math, and I was really good at it. Won a lot of. I spent a lot of my Saturdays in high school traveling to small towns over in Texas, like competing
Yeah.
at math events and getting medals. And so it was as like high school graduation was coming on. It was a really practical decision of just like, well, I'm good at math. I should major in math. What jobs can I do? A Google search led me to the word actuary. I it was really mystical and like I hadn't heard the word before. And I was like, oh, I could be good at that. That sounds interesting. I was already planning to go to UT at Austin, and they had a actuarial degree, so um, went that route. And in college, I happened to get an internship at a pension actuarial firm, and so I had some experience there. I used that to get my first job, and I've stuck with small pension plan actuarial work since.
That's great. That's great. So, did you always know you wanted to work in retirement planning specifically?
No, it was really just that I needed an internship before I graduated. I wanted some job experience, and I just happened to find a role in the retirement space. I was planning to maybe work for a large insurance company like Geico or USAA, right? Like so in insurance, most actuaries work with insurance of some kind. The pension field is very small. There's only 3,051 pension actuaries in America currently. So that there's not many of us.
Wow. Okay. So, what's the biggest misconception people might have about pension and retirement plan specialists?
Yeah, I think in my case, because I'm dealing specifically with pension plans, you need an actuary to work on pension plans. So that's where we're spending the most of our time. I do very little work with 401k plans.
Right.
I think conventional wisdom is pension plans are going away. They're being replaced by 401k plans, or they've already been replaced by 401k plans. And certainly in the large business space, that's 100% true. Why I've been able to continue working as a pension actuary is because we have this kind of niche product for small businesses where we're using a cash balance plan that doesn't really carry a lot of the risk of funding them that the large pension plans had. And it's really providing a tax strategy. There's always small businesses making a lot of money, looking for ways to lower their tax liability. So I set up 50 to 100 small cash balance plans every year. So in the small plan space, this is still a growing industry. A lot of interesting stuff's happening here, and so pension plans in the small business world are not going away, but they certainly are in the large business world.
Interesting. Okay. Okay. I'll have to keep that in mind.
Yeah, yeah,
So, okay. You specialize in cash balance plans, right?
yep,
So, okay. So for listeners unfamiliar with them, what exactly are they? In
yeah.
layman terms.
So yeah, it is a pension plan, but the benefit that a person gets is a lump sum. Um, and so what we do is we really say like there's a small business like a dental office that's a pretty standard client of ours. We usually are looking for a business like that where the owners are older and highly paid, maybe just one or two owners, and then a workforce that has some of their employees are younger. The employees will primarily get a benefit on the 401k plan side. We set up two plans, a 401k plan and a cash balance plan. We give employees maybe 5 to 7% of wages each year in on the 401k side. So it's a pretty good benefit to them. Most people are just getting 4% matches from their employer. So these designs give higher benefits to employees than most employees get in the country. But then on the cash balance side, most of the money is going to the owner, and they're getting maybe 100 to 300 grand. We see designs where 90 to 95% of the contribution is going to the owner. If they were to not set up a cash balance plan, 37% or more of that would be paid in taxes. And so they can pay 37, maybe up to 50% in taxes if they're in a high tax state to the government, or they could give 5 to 10, maybe 15% of the money to their employees on the 401k side and keep the rest in their pocket in the cash balance plan. Once it's set up, there's different administrative requirements. An actuary has to run evaluation every year. Contributions need to be funded. We file a form 5500 to the government. So there's these different administrative requirements. But a company like mine handles all the complex stuff, make sure we don't miss any deadlines, everything gets filed correctly. Um, and really on the client side, all that they need to know is what do they fund each year and making sure it gets into the account. And so we keep things real easy for the business owner. It is just setting aside some of their profits in the cash balance account. They save on their taxes. And we do all the heavy lifting behind the scenes, all the mathematics to make it work and make sure no rules are being broken. Did that answer your question?
Thoroughly.
Yeah.
I love it. Okay, so why are these cash balance plans suddenly becoming so popular with business owners?
Yeah, I think it's just they've been around since the 80s, but I think it's just
Yeah,
there's more and more awareness. More CPAs are aware of them and recommending them to their small business owner clients when they see that it'd be a good fit. More financial advisors are aware of these, and again, they're working with small business owners, recommending that this would be a good way to set aside a lot for retirement, save on taxes. And also, like, a financial advisor, they get a lot of money in the account really quickly. They grow their assets under management faster than if they set up a 401k plan. So I
yeah.
think it's a no-brainer for a financial advisor. It solves a lot of problems for their clients, helps build their business fast as well. And I think the TPA world, the retirement administrators that I kind of the industry I'm in, we're doing a little bit better about marketing our services as well. So it's just growing, and there's always businesses making a lot of money, and this is a good option for a lot of them. So.
Great. Okay, great. So who benefits the most from these kinds of plans? Would it be the business owners or the employees or
Definitely the business owners. When it comes to retirement savings for employees, 401k plans are the kind of best option that most
okay.
companies are providing for their employees. The cash balance is kind of an add-on. It works in tandem with the 401k plan. You keep the 401k plan for the employees, but really most of the money is going to the owner. And again, it's mostly about that big tax deduction to the business.
Fair enough. So what are businesses leaving on the table? Speaking of the tax deductions,
Yeah.
what are business owners leaving on the table by not understanding advanced retirement planning?
Yeah, I think it's just they'll these are all about tax deductions. They're gonna spend a lot, send a lot of their profits off to the government. And so if you want to keep more money in your pocket, this is a solution. But that's really the main reason you'd set up a cash balance plan. It's all about the tax deductions. Yeah.
Okay. And how much money do you think small business owners unknowingly lose through poor retirement structuring?
Yeah. Again, I'd say my average cash balance plan is funding probably 200,000 a year. A lot of my
Wow.
clients are in high tax states. So like
Hmm.
California, you might have not just the state income tax, but some city and local county government income tax as well. I certainly have that where I live in Portland. I'm paying Portland, the metro,
Yeah,
the county, and the state. So a lot of my business owners, their profits are being taxed at 50% between all the state, local, and federal government.
that
So
makes
if you're funding $200,000 a year into a cash balance plan, you're keeping $100,000 in your pocket that would have gone to all the various state agencies. And again, some of my older clients are putting 350 grand away. So you're looking at closer to 150, 175,000 in savings each year. Um, so it is a really powerful tax planning tool. Yeah.
yeah, I can tell.
Yeah.
Okay, so why do defined benefit plans still matter in a world obsessed with 401ks?
Yeah. So a cash balance plan is a type of defined benefit plan. So
Okay.
the only difference between the two is a traditional defined benefit plan, a participant's benefit that gets calculated under the formula is defined as it's a monthly single life annuity payment that starts at normal retirement age, which is 62 or 65, depending on how the plan's set up. Now, most people who are participating in a defined benefit plan don't know what that means. And if you tell them you've got this monthly benefit that pays out at retirement of $1,000 per month, like you can maybe kind of figure that out, but you don't know how much money you have saved for retirement today. It's hard to know like how set up you are. A cash balance plan, the benefits, um, it's a lump sum, so every time that like how much money you have today for retirement. So and so it's closer to a 401k plan where you can log into your 401k record keeper's website, look up your account balance, how much money you have saved. When you get your participant statement from your cash balance every year, you know the lump sum benefit that you have from the plan. And so it's a lot easier for plan participants to know how much their plan benefit is when they're a participant of a cash balance plan as opposed to a defined benefit plan. So those defined benefit plans, like I said, they're going away in the large plan space. Large companies are moving away from them. You could still set them up and they would make sense for small businesses, but cash balance plans just kind of are easier for my clients to wrap their head around. So it's been a long time since I set up a new traditional defined benefit plan. Most of the market's going towards cash balance plans.
So to follow that up, do you think most financial advisors understand cash balance plans deeply enough? Because it sounds
Um,
like it's something that's kind of coming more back into
yeah.
the frame.
Yeah, I think there's I think the awareness is growing. I talk to plenty of financial advisors. I connect with them through LinkedIn or whatever, and they already have some awareness of it. Maybe they have one client that has one or something, or have read some things about them, heard something at a conference, and are interested in setting them up. But yeah, I mean, there's still plenty of. I still talk to a lot of CPAs and advisors that don't know anything about these plans, and so a lot of my marketing is teaching people like here's what they are. We do all the complicated stuff, but here's how it benefits you and your clients. So I think we still have a lot of work before every financial advisor understands what they are. And really the best way to learn them is to have one of your clients set them up, work with a good enrolled actuary who can administer the plan and kind of learn and get that experience that way. Yeah.
So what separates a good retirement strategy from a great one in your opinion?
Yeah. I think it's just kind of checking in every year and making sure that the plan design is still um, serving the retirement planning goals of the decision makers at the business, the financial goals of the company, and the tax strategy of the business. So we might have set up a cash balance plan to fund a really large contribution in the first plan year, but 3 years down the line, maybe business is down, that industry is seeing somewhat of a recession or something. But if the plan design didn't change, they're still stuck funding that large contribution to the cash balance every year, which could cause strain on the business. So um, I think business owners and decision makers at businesses just need to fill in their retirement plan administrators and actuaries, any changes going on in the business. Is there a downturn in the business? Maybe we need to freeze the plan so that they're not stuck funding something they can't afford, or look at changing the design. Also, as the business grows and hires new employees, we might need to change the design to optimize it a bit, make sure it's still giving a really good benefit to the owner and good affordable benefits to the employees. So I think it's just kind of checking in every year at the end of the year once you close your book, see how you're doing and are forecasting for the next year, making sure that the plan is still aligned with the company financial and retirement goals.
I love it. Let's see here. What trends are you seeing right now among business owners preparing for retirement?
Yeah, I overall trends in businesses. I mean, I think a new thing that's coming up is a lot of states have started implementing retirement plan requirements for businesses, even very small businesses. Most of these states also offer a state-run plan if businesses don't want to set up their own 401(k) or something, and they can have them and their employees opt into that state-run plan. But generally, I think it's better for a small business to have at least a 401(k) plan, and they have some control over the retirement fund and provide benefits to their employees that are competitive with other employees. So I think that as the next few, 5 to 10 years go on, we'll see a large number of new 401(k) plans being open because the states are wanting businesses to offer something like that. I think we'll continue to see more states develop something like we've seen in Oregon and California. There's like a handful of states now that have created these state-run plans and provided mandates for businesses to set up 401(k) plans. So I think I think there's something like 15 million small businesses that don't have a 401(k) plan. So a lot of those are going to get 401(k) plans in the next 10 years, especially because there's these new state mandates coming out.
Okay, okay, interesting. So Corvus feels more entrepreneurial than I want to ask you about Corvus if you don't mind.
Sure. Yeah, yeah, absolutely.
Should have let you know that first.
Yeah,
See
no.
here, Corvus feels a lot more entrepreneurial than a traditional actuarial shop. Was that intentional, or did it just kind of come naturally?
The yeah, so when it started, I started the business in 2021. We now have 7 employees. We're still a pretty small business. When I started for the first 2 years, it was just me, and a lot of it was I'd learned the business, I'd become an expert at this stuff, and I just wanted a new challenge.
course.
going out on my own, having the opportunity to make a little bit more, have some more ownership over my life. And then kind of a couple of years in, I was really enjoying the business side of things, even more than what I'm good at, the actuarial side. And so I just wanted to learn how to be a better business owner, and do those things. So 2023, there was an opportunity. There was another self-employed actuary, Bruce Murata, who wanted to sell his book of business and retire. And so I took that opportunity and negotiated buying his book of business from him, and that's when Corvus really took off. My brother has been my brother Josh, he's been a financial advisor in the past, worked at Edward Jones for a while, but he's also worked like in commercial banking with JP Morgan Chase and owned some small businesses in the contracting space. Like his most successful, they did like wooden fences and decks for people's backyards. So he's got a wide range of finance and small business knowledge. And so I asked him to come on and help me. He really helped me buy that business from the other actuary, helped me navigate that process. And then he's been helping me run the kind of non-operational side of the business. I'm I'm CEO of Corvus, but more than anything, I'm the COO. I'm running the operations, managing the team, those kinds of things. And me and Josh are kind of the running the company together. And so a lot of the entrepreneurial DNA of our company really is coming from him. He loves running small businesses, has a lot of experience there. And yeah, but I've been growing as a business owner too, trying to learn this and do it well. And we really have an appetite for growth, and we want to be the main enrolled actuary in the country that provides services for these cash balance plans. We want to be the premier company for this kind of niche financial product for small businesses. Yeah, so that's kind of where we're at today. Team of 7 people, growing rapidly, and I'm having a lot of fun running the business. Yeah.
Great. So tying back in with what you were saying before with your brother and stuff, as an entrepreneur,
Mhm.
what was the biggest challenge in starting and growing Corvus?
Yeah, the first 2 years, honestly, it was just I'd never been on the sales side, so figuring out how to build awareness for the business and kind of market myself and do the sales. And it was just the biggest pain point for the first 2 years was how am I going to pay bills and not get evicted from my apartment?
Yeah.
Like I really started ground zero, had very little saved, and it was just, I think I can pull this off. And so the first 2 years was just financial problems, like making it to the next year and not going out of business. Um, I had built up enough business that kind of had a lot of my own clients, and then in 23 we bought that other book of business, and then the problems were um, just merging the two businesses, getting all the work done, training some employees to pick up the slack where I couldn't handle some things, and so it was just we had more work than what we could really handle. So I was working long hours. There was 3 months in 2023 where I I worked I had one day off each of those months. I worked every day like 10 to 12 hours just making everything happen. So it was like the biggest constraint of the business was just my ability to put in time and keep it all together. Um, 24, 25, 26, I have a really good established team now. And so right now, the biggest problem is just kind of staying focused, keep building that awareness, building out our kind of marketing funnel and getting new business in. But I'm working with a great team of actuaries, and we're doing high quality work, getting the work done well, and so now it's just building awareness of the business and getting more clients in.
It's great. So you work with a lot of small businesses.
Yep.
What separates successful owners from struggling ones?
Yeah, I mean, I think we all kind of know good small business principles. You have to be able to deliver your good or service well.
Right.
Like you need awareness, some amount of marketing, and being able to close sales calls well and deliver what you're promising quickly. You got to pay attention to the finances, the cash flow, do bookkeeping well, keep clean books. None of this stuff is too complicated, or you know, you can go and buy like 10 business books at your local bookstore and kind of get a business education really quick. I think the hard part is just doing it and making it happen. You, as a business owner, there's no boss keeping you on task or telling you what to do. Your attention is pulled in a lot of different directions. And so it's staying focused on what's the biggest pain point for the business today, making sure that gets done while also looking to the future. I think running a business is a lot like keeping your body healthy. Like we all know we need to eat clean, not overeat, don't eat too much sugar. We need to exercise, stay calm, these kinds of things. But the hard part is actually doing the work. We all know what we need to be doing, but it's hard to motivate ourselves to actually get to the gym, to go for a run, to go, to cook a nice balanced meal rather than eat junk food. And that's what I think running a business has been for me. Like I know what I need to do. It's just keeping the motivation and the focus going so that we do the right things.
Okay. So, see, what mistakes do you see financial professionals make when they're trying to scale?
Yeah. I think a lot of times, maybe the stage of business I'm in, like we're pretty solid. We're making money. We got a lot of good clients, and um, recurring revenue coming in. I've got a good team. It's really easy at this point in the stage of business where I'm at to start like getting distracted. Like, oh, maybe I'll add another service offering, or maybe I'll try to improve the industry in some way, like make some new software product, or um, these kinds of things. Like you start adding stuff, but I'm still a very small business, and I think being successful is doing more of what's got me here. Just keep staying in my niche. At a certain point, I'll be large enough where it makes sense to like add other service offerings or whatever. But I need to just kind of be honest with myself that I'm still a very small business. I'm still running a very small business, and it's just keep doing more of what's been successful, and stick there, and be okay doing the same thing over and over again, until we get much larger and have more money to throw into developing a team to do a different service offering rather than just kind of patching something small onto the side. Um, so I think a small business can get distracted in that way and try to expand what they're doing before they're really ready. And that's kind of what I'm thinking a lot through, of like, I don't think even though it feels a lot more comfortable today, we're not ready to really add a lot of different things. I want to just stay in my niche, do what we're really good at, these cash balance plan designs.
Okay. So, what does great client service look like in a highly technical industry like yours?
Yeah. A big part for us is just responding to clients quickly. A big feedback we get when we're taking over business from other actuarial firms is, um, yeah, the actuary I've been working with, I think they're really good at what they do, but I can't get a hold of them. They never pick up the phone. They're not available to hop on a Zoom meeting. They take 2 weeks to respond to my emails. So
Oh,
that's really been, and I get it. I have compassion for all of these actuaries. There's not many of us. Like I said, there's about 3,000 in the country. And so we all have high caseloads. We're all really busy. A lot of times during the year we're working overtime. So it's hard sometimes to make the time to get back to people. But um, I've really built a business around that, of like respond to people as soon as possible. If it's an email, no longer than 24 hours before we respond, preferably by the end of the workday. Work, when we get data, it needs to be turned around in 2 weeks at the latest, 1 week if we can manage it. Um, Even faster if deadlines are coming up, obviously. Being available, just answering the phone. If a client calls, you answer it. Scheduling a call very quickly in the next day or two if they need a longer conversation. It might be helpful to be over Zoom where we can, share a screen and go over numbers and that kind of stuff. So I think in a technical industry, it's just being available to them, and knowing that the client side of the job is more important than crunching the numbers behind the scenes. And when we do talk to people, explain it in a way that isn't condescending, but it is a way that they can understand. That's a big part of us as consultants is breaking it down to where someone who's not a mathematician knows what we're talking about, but not like feeling rude or condescending in the process. I get that feedback a lot too, that a lot of actuaries are just not people, right? They're
Right, right,
not
right.
great at the people side of the business. And so I've really focused on when I'm hiring people that they're friendly and kind and easy to talk to. That's more valuable to me than like the most intelligent mathematician in the world. I need you to kind of be able to do both sides, do the math, but also talk to people and you know speak to what they're worried about and the pain points that they have and provide solutions to them quickly.
Of course. Okay, so now that we've gotten this far, I wanted to ask you about tech impact.
Yeah.
How do you think how do you think AI will impact actuarial work over the next 5 to 10 years?
Yeah, so a big thing that has happened recently in our industry, that there's a few companies kind of developing like CRMs, client relationship management software and task management software that has embedded AI in it. Um, we're onboarding one of those softwares later this year. Stacks AI is the company name. Um, so since we work with small businesses, we have high client caseloads. My employees they might have 100 to 150 clients on their caseload list. And so it's just a lot. It's easy to, if you're not tracking the data really well, to have one of those plans kind of fall through the cracks, and we don't realize like something needs to get done for them until a deadline's like a week away, and that now we're scrambling, or someone didn't get their data request, so we never got data. Now we're like doing things last minute, and so uh, in my industry, it's super important to have a really good CRM software that's tracking all the client data and like um, our CRM has like task management, so we know like what needs to be done for each client and where we're at in the process, and it's shifting between different people because some people will prepare stuff, others will review it, and then others kind of present it to the client. So we need a good workflow through all that. So these CRMs that are embedded with AI in our industry are providing really good solutions because the AI is kind of monitoring like even our email as well. Like, hey, you promised you'd get something to them next week. Next Thursday. Well, now it's Wednesday. Have you followed up? Like,
Yeah.
so those kind of reminders are really crucial. And just watching the deadlines and all that stuff. So that is really going to be incredibly helpful for our business once we onboard that, making sure we're staying up on top of all the work that we need to do for everybody. So that's a huge thing. Also, we've seen tools. Every year we need to gather certain data from our clients. So we send out these data requests. They submit it through our secure portal, and we now have AI tools that can kind of scrub the data. If there's pieces of information missing, they'll respond for us to the clients and try to get those last pieces of information. But also, like we will, if we get like a employee census, like all the information about a company's employees for a given year, the AI can kind of sort that in a way like who's in the plan, who's not. Stuff that we would do kind of data entry by hand. AI is
Yeah.
doing that now, as well as trust accounting for the plan assets and the retirement plans. We would look through and scrub that, like what transactions occurred, did the contributions that need to be made actually get deposited in the accounts? Are there any transactions that we weren't aware of that um, needed some paperwork behind them that didn't get done or whatever, those kinds of things. So there's now AI tools that are scrubbing the trust accounting and making sure. So that's saving us so much time on the front end. Um, I think as we go to the future, the AI tools will just kind of start to migrate into our other softwares. Like right now, the actuarial software, it's all like kind of manual data entry from our team, running the numbers, reviewing the numbers, those kinds of things. And I think just over time, we'll see AI kind of speeding up those processes and making those softwares more efficient. But right now, there's nothing like that really happening on the actuarial side. But I'm sure in 2 years there will be these products with AI kind of
Of
embedded
course,
in the
yeah.
actuarial software. It's moving
Yeah,
fast.
yeah,
Yeah.
it's happening so fast. I mean, I also I incorporate AI tools in a lot of what I do.
Yep.
And you have to pay attention to the news that comes out every day because
Yep.
every time you turn around, there's a new leading chat bot, there's a new
Yep.
agentic AI, there's OpenClaw, there's Manus, there's something else. Now, no, I personally I know how to use it. I like to think I know how to use it pretty well.
Yep.
So integrating it has been a lot of fun, but I know that it also is a lot to take on because there's always a new development coming. So
Right. And
so what?
yeah, and I've been thinking a lot about as a business owner and how I'm adding AI into things. Because it's really easy to like see on LinkedIn or other places, other business owners like talking about, I added this AI tool, it's increased efficiency. It's easy as a business owner to get a little bit of AI FOMO, and
Yeah.
worry that I'm getting behind or something. Um, but I've started thinking about it like, um, before I implement AI into a business process, first having people on my team doing it, then creating systems and standard operating procedures, some SOPs around that task or workflow, and automating or improving the efficiency on the system of how we do things, and then add AI after that. Because if I don't have people on my team who know how to do it, it's hard to really vet if the AI tool is producing the outcome we want. So that's pretty crucial. And if we don't already have an SOP in place for doing the work process, then it's hard to really know like what part of the task do we need to optimize, what's bogging us down, what's taking a long time, and where it would be valuable to add AI into the process. So um, without people who know how to do the work and systems for how we're doing the work efficiently, it's hard to really gauge if AI is giving us the output we need and improving efficiency. So I've been trying to slow down my AI implementation actually, and really think through those. Like I'm working right now really on just improving all of our SOPs across our stuff and not worrying too much about getting behind, because if I can implement AI thoughtfully in ways that make a huge impact on the business, then I'll catch up pretty quickly if I did get behind.
Yeah.
And I think a lot of people are just so scared that I'm going to get behind on AI. I'm going to lose some revenue. I'm going to go out of business. Someone else is going to outflank me. That they start implementing AI kind of in haste, and then is not really done in a cost efficient way for their business, and in ways that is not really optimizing their business processes at all. So I think taking a slower approach and just implementing it in really thoughtful, wise ways is better than slapping on any AI tool that you can find. You know what I mean?
Yeah, then plus you got to have the human element still
Yeah.
at some level, especially in finance, because people like the idea of new technology being helpful, but
Yep.
also the human element is always going to be a factor, especially because, they want someone that can has that human instinct or judgment, regarding their this is your finances, so people
Right.
want to feel
Right.
safe. So, okay, speaking of the human element, so let's get to know you a little bit better, okay?
Yep.
So, you've written about the actuarial exam process. How brutal is it really?
Yeah. So it is hard. Luckily, the pension actuaries have a shorter exam process than insurance actuaries. An
Yeah.
insurance actuary, it's like a 10-year period, like 10 exams. Each one
Jeez.
is maybe about as hard as a MCAT, like if you're
Wow.
wanting to go to med school.
Right, yeah.
Each of my exams, I probably studied 300 to 400 hours leading up to them, and all of them I took more than once before I passed. So it was a lot. But
Wow.
part of why I decided to stick with pensions is you only need 3 exams. So I was done in 4 years after college because one of the exams took me, I had to take it 3 times. They're only offered once a year. So I kept pushing the process back. But 4 years after college, I had my evenings and weekends back, and that was really nice. Where it would have been a much longer period if I was in the insurance situation. So, um, yeah, they're really difficult exams. You got to learn a lot of stuff, but I think it's worth it. This has been a really great career for me. When I was an employee, I was earning a lot of money, and
Yeah.
then I had this opportunity to start a business with a skill that's really marketable and people need. So I'm really glad I put in that work and got my credential and I'm where I'm at today. And so um, two of my employees are currently taking the exams to become actuaries, and that's really meaningful to me. I want to provide the same kind of opportunities that I was given, and so helping people start this career. And I also serve on one of the committees that writes questions for the EA2F exam. So that's one of the pension actuarial exams. And so I'm kind of helping the industry out by making sure that exam's able to be given each year and writing questions there. Yeah.
Okay. Okay. So, what kind of personality tends to thrive as an actuary?
Yeah, I think if you can do mathematics, you can do this work. And so a lot of actuaries are more introverted, like
Yeah.
just kind of sitting in an office alone, crunching numbers. But in the small plan pension world that I'm in, you really need so much of what we do is consulting with the clients, answering their questions, making sure everything's being done correctly, and giving them the information they need so that they can do what they need to do. So you really need to be able to have some like high level mathematics ability, but also have some ability to do the people side of the business. So um, and I think that's a lot of why there's not many of us is it is kind of hard to be able to do both, and some are better at one versus the other.
Yeah.
Luckily, as you get a bigger team, you can kind of start, okay, you don't like talking to people, we'll have you preparing valuations and doing non-discrimination testing in the background. We'll have other consulting actuaries on the front end side of things. But yeah, I think if you really want to excel in our industry, it's being having really good math abilities, but also the ability to be a consultant and talk to people and explain things in a way that they can understand.
Okay. Okay. So, all right, here's a fun one. What's something about you that people wouldn't expect?
Um, yeah, I do have a whole like sleeve of tattoos. I think a
Oh,
lot
cool.
of
All right.
actuaries are kind of buttoned up, dry
Yeah.
people. Um, I had a coworker at my first job who joked that I was an actuary with an edge because of that.
Yeah.
And
Hey,
then
that's cool.
Yeah, yeah. Another big hobby of mine is I watch horror movies a lot. Like that
Okay.
is something I really like to do at night. So those are maybe a couple things off the top of my head that, um,
Okay.
yeah,
So, all right, okay, one more from the human side. Let's see here.
yeah,
If you weren't in actuarial science, what do you think you'd be doing?
yeah. In college I almost switched my major to classics. I studied Latin for my language, and
Oh, cool.
yeah, like I think there was almost a period where I was going to just study Latin and Greek the rest of my life and like be an academic and a professor. I'm currently reading through the collected works of Plato. I really like philosophy, but specifically like ancient Greek and Roman philosophy. So I think that's kind of what I would be studying. That's what I'm interested in. And really, I think like when I retire one day, uh, like in
Yeah.
retirement, I'll just be spending 40 hours a week reading. You know what I mean? Um,
Yeah. Okay, that's cool. Okay, so we're gonna wrap this up for a couple more questions. Let's hear. What's
yep.
one thing business owners should do this year to better prepare for retirement?
Yeah. I think the first step, just if they haven't, like find a financial advisor, maybe a CFP who does financial planning, and really get an idea of like where they're at today, what they need to have in retirement, and what's the best way to fill that gap. and
Okay.
start something. If you don't, if your business doesn't have a 401k plan, it should set one up. They're not that expensive. It benefits employees. And yeah, just get good advice from a financial advisor you trust, and start building out a plan, and figure out a goal of what you need for retirement, and then work back from there to get yourself there. Um,
Okay.
yeah.
Let's see here. Let's see. Where do you think the retirement industry is headed over the next 10 years? And factoring everything from like tech to all this other stuff that's going on. What do you think is happening?
Yeah, like I kind of mentioned earlier, that I'm aware that there's about 15 million small businesses without retirement plans. And there's only like 900,000 retirement plans in America. So the gap is pretty huge. I think probably 50% of the workforce is covered under some kind of retirement plan, just because the large businesses all have them and they employ
Right.
most of the employees in the country. But there's still a huge gap to fill of getting businesses sponsoring retirement plans, because in America, corporate funded retirement plans or corporate sponsored retirement plans are our best option for saving for retirement. So I think we need to solve this problem and get most of the companies in America covered under a retirement plan. I think AI will continue to make the um, kind of record keeping side of the business and the administration side of the business, the stuff that I do, more and more efficient. So we're kind of a niche industry. Not a lot of people work in retirement plans. I think AI, it's not really about replacing our jobs so much as amplifying the output of what we're able to do, so that we can help all these businesses that don't have retirement plans today. That's really what I'm thinking of, is not reducing workforce by increasing efficiency, but keeping the workforce the same or growing it and amplifying the output using AI. So I do think AI has a lot of is going to have a lot of functionality and ways to improve our industry, um, on the compliance side, calculating contribution amounts, those kinds of things, completing the filings that need to go to the government, but also on the marketing side. Producing more content for our third party administration businesses so that there's more awareness. Not a lot of Americans know what we do. So a lot of the reason I think that small businesses don't have retirement plans is that some of them just aren't aware that they could have one. It feels like I got to be much longer. I got to make more money before I can afford something like that. But most small businesses are already in a place where they could set a 401k plan up. But the awareness just isn't there, in my opinion. Yeah.
And last but not definitely not least, where can people learn more about you and Corvus Pension Actuaries?
Yeah, so my website is corvusactuaries.com, and you can find me on LinkedIn. I try to post every day. Zachary Dennis
Yeah.
on LinkedIn with Corvus Pension Actuaries. So LinkedIn and my website are probably the best places to go. I recently started a Substack, but I've only posted 2 articles. But you can follow me there, and I'm trying to post something long form every month. And so that'll go into more kind of nitty gritty details on some cash
Okay.
balance plan and retirement plan stuff. So probably those 3 are the best places: my website, LinkedIn, and Substack going forward.
Okay. Well, Zachary Dennis, you've been a great guest, very informative. I think we all learned a little something today regarding what you do and what actuaries actually what they do for their clients. If you learned something today, go to corvusactuaries.com. Find Zachary Dennis on LinkedIn. He's posting all the time, and subscribe to his Substack. All right, Zachary, thanks again one more time. All right.
Yeah, thank you.
Hold on one second. Let's see. Stop recording. Uh,